Thank you for hanging out with me today. I'm JB Bryan of JB Bryan Financial Group, a registered investment advisory firm, and I'm the Chief Investment Officer. And today we're going to talk about setting financial priorities, setting your financial priorities. And next week we're going to talk about your legacy, knowing your why. Why do we do the things we do? What's important to us as far as leaving our footprint on the planet. So that's next week. This week, of course, is financial priorities and just discussing them and to just give you some ideas as the year comes to an end and before we start spending. Let's think about some things that we really want for us throughout the year. I have a checklist of things that I want to make sure that I share with you. Please download the AfroEconomics smartphone app. It's free and download, and it gives you reminders of today's session. Visit AfroEconomics.com and register for our AfroEconomics update. Talks about the economy in general. It will invite you to our different events, different and timely and hopefully informative events. And also, take a moment and like this video if you like it, and subscribe to the YouTube channel. And it is for you. AfroEconomics, provided by JB Bryan Financial Group, is specifically for, it's a strategic financial management program designed for the advancement of Black wealth in America and abroad. So let us know what's important to you. My email is jb@jbbryan.com, and let's make sure that we keep in touch. You can contact me through each email or call me at 1-844-JB-BRYAN. That's 1-844-522-7926. So let's talk. Make sure you put in your comments. Erin is with me today hanging out, and she's going to, so we're interactive. So make your comments and let us know if you need anything. And the same rule applies, that if I start acting up and say, you know what I mean, because I'm used to talking to you and I can't get to you right now. So if I get that nervous energy flowing, she's going to throw miscellaneous objects at me. Hopefully not those Star Awards back there behind me. But she can throw whatever she likes. Lunch is not here yet, so it won't be food today. So that's financial priorities. Number one, I have on there, guess what? It's save, save, save. Too many people make the mistake of only saving into retirement accounts if they do save at all. But what do you do when you need to get your car fixed? Right? You have an emergency. There's a family emergency. There's so many other things that could happen, and you don't want to have to disturb your retirement account every time you have a cash flow need. So we need to save, of course, into the tax deferred accounts, your IRAs, your 401ks, your 403bs, your 457, whatever the tax code. Those programs are for not touching until you're 59 and a half. That's the best case scenario. So it's not a savings, it is an investment tool. So make sure that you set up a savings, an emergency fund, and an account where you could actually get to without any penalties, without worrying about market volatility that or any extra taxation or tax penalties, that this money is available to you. That's what an emergency fund is. A second point would be that we want to automate everything as much as you can. Automate your budget. If you know that there are basic things that have to be paid each month, and there is specifically if they're the same amount of money each month, then automate it. So if you're, and especially if you're blessed to be in a situation where your income is the same thing each month, you know what your income is going to be. So make sure you automate those things that are taken care of during the month, so that you have, and I'm talking about automating the savings that I just referred to, automating your retirement account, automating your vehicle payments, your cell phone, your utility bill, that automate your budget to the best of your ability. Even automate the amount of money that you want to give each month. If you make donations, if you're a tither, make sure that these things are automated. Do we have a comment? Oh, we're good. Great. So so anything that you know that you're going to have to pay each month, automate it as much as you can. A third point is to I have down like skip the luxury car, skip the BMW, and make sure you do set aside money that is just for fun, so that you do have the savings for the emergency. You do have the emergency account, but make sure that you're saving a certain amount of money that is for your fun account. Now, I'm telling you to do that, but I don't take vacations the way I should. And, that's a major goal for me for 2016. I'm going to ask Aaron to stay on top of me about making sure that I plan a vacation for myself and then plan a vacation for me and my daughter. Because now when I take a vacation, it doesn't feel like a vacation, because it's always, I'm a single parent, so it's about her vacation. So it's sometimes it's a lot more active. If it's Disney, if it's Universal, that's not like my idea of what I need at this point in my life. My vacation dream is different. So if it's, sometimes we have the money, but we won't take the time. And then when you have the time, you often don't have the money. So if we schedule accordingly and plan for it, maybe the two shall meet, the time and the money. So another financial priority is to get in tune with your debt. I've had several meetings recently, and so many people have been telling me about debts that they have that they're just allowing to continue to accumulate. And I'm talking about dangerous things. I had a discussion yesterday with the lady who has to go to court regarding city taxation of properties that she has. And these things are major. And when that tax bill goes to a property that you're renting out, the tenants tend to think that that means that they don't have to pay you, and it can lead to another problem, because then you're not getting the income from that property that you should be using to pay the taxes on the property with. So we have to be very conscious of our blessings will flow through our ability to take care of the responsibility on those blessings. That to whom much is given, much is required. We have to accept the reality that there's always going to be a give and a take. So we have to get in tune with the debts that we have. Stay on top of the money that you've borrowed. That's what I wrote down. Stay on top of the money that you borrowed to pay for the significant expenses that you may have, like school loans. And there's a lot of talk about, now that people have a lot of school loans and they have all this school loan to pay back. It doesn't matter what happens. There's no way the government is going to allow you to not pay back the existing school loans that you have. It's not going to happen. Something may happen where people can go to school paid by some government subsidy in the future, but right now that does not exist. And so school loans do need to get paid back. And even if they do allow that, imagine the restrictions that you're going to have. They're going to tell you what school to go to. They're going to tell your children what school to go to. They're going to tell you what class they can take. They're going to tell you there's always something involved. It might even incur that they may not have a loan, but they're going to have to work and pay back something else over a certain period of time. It's going to be the same thing, but there is no free lunch on this planet. There isn't. That's not going to happen. You're not going to be able to take something from a system and not put something back into that system and think that system will still continue to work. It's just not going to happen. And AfroEconomics is all about self-reliance and us developing a system for ourselves and for our community that we are self-reliant. We're not relying on others to take care of our responsibilities, our debts. That's what we do. That's what we do. And so make sure another financial priority for you to consider is to make it a priority to talk to your family about what's important, to make it a point to, if you're watching this by yourself, please feel free to share this video with your partner, making sure that your spouse understands that this is the reason that I'm saving this much, or this is the reason that I don't want us to go into that debt, because I have certain financial priorities and I have something big, or I have a goal in mind for us. But make sure that you take the time to discuss financial priorities prior to marriage. It's very great, to just talk about it, because you may have someone that you love, but their goal in life is to just have things that are not your goal in life. Like your priorities might be totally different, or they may have no goals, and you might love them, but they don't have any financial goals, where you have specific financial goals and things that you want to accomplish with your life. Your legacy, like we're going to talk about next week, is very important to you. So, think about it. Is the only reason that they go to work is to get their hair done or something, then and the reason you go to work is because you love what you're doing, and you're helping people live better lives, or you're saving lives through your work and things that, and people save people's life in so many different ways. I said it. Yeah, you good. Good job. Good job. If you miss one, I'm getting you back now. But people save people's lives in so many different ways, not just medically, but I am so thankful to God for the ability to help people get the finances out of the spotlight of their life. That I shared with a lady that I'm able to help this morning, when she came in, and I said to her that I don't want you to ever have to worry about having a financial advisor, having a financial team. I want you now, while you're ahead of retirement, while you're still working, to make your financial life a priority. So when you retire, you understand everything you're doing. So we're talking about financial priorities today because it's important. And then that last one was that discuss with your partner financial priorities. Let's also talk about making a stronger safety net for your family the older that you get, as you bring children into your family. If you're marrying and each of you have different children, or one of you have children from another spouse, and you don't have any children, but talk about how you want things to be handled for your children if you don't have children together, or if you have children from a previous relationship and children together. But talk about how you can actually organize these things, make it make it a financial priority, that we have all of our wills and estate plan and power of attorney and beneficiaries, and everything is front and center. Make it strong and transparent how you handle your finances. And then consider having good life insurance policy on yourself for those who would suffer financially from your debt. The entire planet, of course, would suffer from emotionally from your death. I hate to see you go. But there are actually, loved ones who you have debt with, you have joint debts, you have things that you would like to take care of. If you have children and you want their college to be paid for, so that's what life insurance is for, is to take care of those who you care about if you die before you've accumulated those assets to provide for those needs. If you die in advance of your having your multiple millions of dollars, then the life insurance is there to protect you, to protect them, and for you to be able to protect them. And so make a point to know where you stand. Always know where you stand financially. And we don't take that time to know your credit report. We don't take the time to actually sit down with a financial success professional like myself, and we should make that one of your, if it's quarterly or twice a year or every month or whatever, have a financial advisor. I have the ability as a registered investment advisory firm and as an investment advisor for my firm to work strictly on a fee base. And I believe for you as a customer, when you're working with someone who's not attached to a specific product, and they can actually just work as a fiduciary, as a servant for you, they that I have the ability to just take care of you and advising you on your 401k, on assets that are not held with me, that and you need to have someone that's on your speed dial, that if you have a financial question, taxation inquiry that is related to something your financial advisor can help you with. Your financial advisor is a good person to consider getting options of referrals for tax preparers, tax attorneys, lawyers for assisting with your will, but making sure that you know where you stand in your completeness of your financial picture. A big financial priority, understanding the trade-off between college and retirement. Something that we really need to think about. And even now, amazingly, college and retirement are conflicting with each other for the person. Now, we're not, because really when I first think about it, I think college and retirement, I'm thinking the kids going to college and you retiring. But now we have adults going to college and they also want to retire. Now, so college is for people who want to, theoretically, especially if you got to go into debt for it, because you can get the knowledge that you need without getting the title of a degree. But so if you want to get the title of the degree, then it will benefit you mostly. It will help your retirement the most if you're going to allow yourself to work so that you can make money for that. Especially if it's a debt, if it's costing you a debt, then the debt is for an investment of higher income. That's why we're doing it. And the earlier you do it in life, the more that investment can pay off for you. So when they say college graduates, and I have this in the book that's coming out in January, God willing, have a big part of AfroEconomics is knowledge. And we need to know that when we're spending money on school, the earlier the better, because the investment has more time to compound and grow for you over your lifetime. So when they say, oh, college graduates make more money, they're not talking about someone that went to college at 60 years old, because most of their income earning time is behind them. Theoretically. Now, they could, of course, and that is looking at it in the most pessimistic way, and realistic way, I guess, because an optimist would say some people didn't make any money ever and they get to 60 and they make the greatest invention in the world. Yes, but they could have done that without going to college, basically. It's about your education should be looked at as an investment, especially if it requires that you're going into debt. Very, very sticky topic, especially with so many people, older people going back. I just encourage you to make sure that you look at the debt very carefully before you go into debt at an older age, nearing your retirement time. Understand what you're doing and understand how it's impacting your retirement, because that loan has to be paid. It has to be paid back. And that's also a key point here, is to take it serious. Take your retirement planning serious, because you cannot get a loan for retirement, but you can get loan for college. So sometimes you're like, oh, well, you could just get a loan for this, and it allows you to not take it serious. You're about to throw a card at me. She's going to get me for saying, but at least I caught myself. But before the card hit my head. But it is good advertising. It is my business card that she's throwing at me. And I'm not going to say it again. But let's take seriously contributing to our 401k, because the 401k, the earlier you start in it, the better it's going to help you over a lifetime, just like the investment of the skill or the education or the degree, that the earlier it's done, the more it's able to pay off for you. Where your 401k, your investment markets work the same way, and hopefully you're in the right investments. Unfortunately, too many people get in a retirement plan at work, and you're putting in the money each month, but you're never thinking about what you're putting it in. It's kind of like the person that goes to the gym, but they stand around and they talk to their friends, but they go on Facebook and they go, I went to the gym, walking in the gym, location gym. Well, you're in the retirement account and you're bragging about you're in the retirement account, but what are you doing in the retirement account? And that's where having key financial advice really pays off, just like going in and getting into class and fully participating in the aerobics class or something at the gym. Fully participating into your retirement plan at work should be taken very, very seriously. And if you own your own business, you're self-employed, or make sure you take it seriously of participating in the retirement plan as well, and getting those things set up and automating it for yourself as well, and for your staff, because it's a great benefit, and the earlier the better. But having them educated, having yourself educated, because it defeats the purpose if you're aggressively investing, but you're accumulating credit card debt. And that brings us to my next point of making sure that you tackle your debts and to eliminate them. Because if we're investing and you're doing 10% into your investment, but you're increasing your credit card debt every month to make that happen, that's totally defeats the purpose. Let's bring that home. So you're participating in the plan, but you're still carrying a credit card debt. Well, the credit card is a guaranteed charge. They're guaranteeing, say it's 15%, or even if it's low as 12%. But you're guaranteed they're going to charge you that 12% on that credit card debt. But then you're not guaranteed that in your investments in the 401k. I mean, and I'm just talking about that credit card is guaranteed. So if you get rid and stop accumulating in that credit card debt, is very, very, very important, because it doesn't matter if you have this huge 401k balance that you think you have, but you have this growing credit card and debt that's accumulating each, right? So you're defeating that credit card debt is compounding, just like the potential returns that you can get on your 401k. But that credit card, in most cases, is compounding a lot faster, because the rate they're charging you is much higher than what you're making on your investment. So we have to take it through. We have to really take the entire process through our mind. It's not about what things look like. We got to break it down to what it truly is. Self-deception is dangerous, and the best thing that we can do is keep it real with ourselves. So let's go over some of these key things. And one thing I might add here, that a financial priority for some of you that are over the age of 50, there's good news. Over the age of 50, that in retirement plans you can do, or even in your individual retirement accounts, you can do what's called a catch up. So a note to make sure that you take advantage of your catch-up contributions into your retirement plans when you're over 50 and you have that money and you know better and you want to really, really, really do it right. So take advantage of that. And then also look into having, if you're younger, you want to make sure that you have some sort of disability protection. Surprisingly, though, statistically, it says that when you look at reasons that people lose their home, it's because of in most cases, it's because of a disability, in many cases, a disability before a job loss. Because if you're healthy, you can get another job. So if you're healthy, you can get another job. But if you're disabled, you can't get another job. So you need to have some sort of, and you need to look thoroughly in through all of the insurances and make sure you have proper income protection, an important financial priority. The disability insurance, much more important than all of those different specific insurances like cancer insurance and things like that. You just need, I suggest focusing on having good generic income protection insurances.
We have a question.
Yes, we have a question. Right at the nick of time.
Yes. It says, how do you set financial priorities when you have to buy all this Thanksgiving food?
Oh, financial
Christmas
priorities.
And New Year's Eve. How do you do that?
Oh, that's such a good one. The question was, how do you set who was that asked?
Marcus Rice.
Oh, Mr. Rice. That he actually is a business owner also in real estate, and he's right on point with that. Setting financial priorities and making sure that if you still want to do what he would want you to do, build your wealth through purchasing real estate and owning your home, how do you stay on course with that? How do you stay on track with doing things? Because as a tip number one, and I should have mentioned that too often people want to take from their retirement account in order to make their home purchase, but your savings is for your emergencies as well as for having a purchase the lump sum for a down payment on a home. Granted, you can, take out money without penalty from a retirement account for a first home purchase, and many people don't know that. So make sure that at this time of year, you stay in tune and stay on track with your financial priorities. If you're saying 2016, I want to purchase a home, or 2016, I want to upgrade my home, 2016, I want to get the dream house, or 2016, I'm going to contact Marcus Rice and we're going to, do these things. Make sure that you have all your ducks in a row, that a good financial priority is making sure that your credit is intact, that you check your credit score regularly. I check my credit each month because if you're out there and people know your name, you never know. You want to be the first one to know if there's an idiot, that's doing things and it's on your credit report that you didn't do. So protect yourself and stay on point. Please participate in. I'm having a Black Friday live streaming at 11 o'clock on Black Friday, so that to encourage you to stay on track with your financial priorities. And how do you do it? You do it. You just got to do it. No excuses, no excuse attitude, and fully participate in AfroEconomics. I hope that you will. So next week it's going to be about your legacy, setting your financial priorities. And remember, go ahead and mark your calendar. Skip the mall. I don't shop on Black Friday. It's an ignorant waste of time. And I'm working as usual. I encourage you to do the same. Set up your financial priorities and stay on course on what's important for you and your family. And I am JB Bryan of JB Bryan Financial Group, a registered investment advisory firm. I'm the Chief Investment Officer, and we're at 1-844-522-7926. That's 1-844-JB Bryan. Download the AfroEconomics app on your smartphone so you'll get all the updates and tips, and asking you to participate. And you'll get a reminder so you'll never miss me. There's even a button for live streaming now on the app. Oh, that app is just hot. There's even an apparel section. You can buy the t-shirt. So, and then please do me a favor and like the video. I want to be like Miss YouTube. I want to be the extreme Oprah extreme on YouTube. You know, network doesn't have to pick me up. They should. They're going to be begging me after you've given me that like that I need. So, but most importantly, I want you to like it because I like it when you like me. So have a great day. God bless everyone. And I am JB Bryan with AfroEconomics. Blessings.